What's up, guys? How's everybody doing? Did you like the Sardaukar chant? I thought you'd like that. It's from Dune. What's going on? What's going on? Just give me a sound check, and we'll get it started. Just shared the link. Give me a sound check, and as not just the microphone, the background noise too. I think I have it. Let's see. I don't want it to be too loud, but I do want some tunes. Okay. Yeah, it was. It was a sick movie, and it was. What's even better about it was that it was like an intro to what obviously will follow it, which is part 2. You see the preview for Dune, and you think that the what's that girl's name? I can't remember the actress's name. You think that she's gonna be like it, in a majority of the movie. Not to spoil it, but she isn't. Cool. Okay. All right, guys. So every Tuesday and Thursday, 1 p.m., go live. Project is nearing completion. My partner, Josh Rager, and I were the co-founders of BlockRoots. So we've been working on something now for a couple months. So that should be good to go soon. But I go live now every Tuesday, Thursday, 1 p.m. And I'm also doing 3 call-ins. 3 call-ins a week. So after this stream, so we're going to keep the stream not short, but Zendaya, yeah. We'll keep the stream around an hour, and then I'll launch the call-in, and I shared the link on Twitter, and it's basically an open discussion. So call-in is similar to Twitter Spaces, but it's recorded, it's transcribed, so yeah, great platform. So I'll be going live after this, and it allows you guys to, hop on, talk, shoot the shit, you know what I'm saying. So anyway, got a couple things to cover before we get into it. I just want to give a shout out to 17 Bidding. That's his Twitter handle. He has been writing the stream summaries, and he's been doing a phenomenal job. Straight to the point, concise, cogent, CC, Kenner and Clark. So I just want to give a shout out to him. He does a great job. So after the stream, if there's anything that you think you might have missed, or if you just like to keep records of these, period, I like to read things over. That will be available. And he's actually turned them out really quickly. So I was expecting them to be, out within a 24-hour period, but I guess that makes it less actionable the longer you wait. So yeah, he gets those out within an hour or two. And if he's listening right now, and if he's at this point and he's not enjoying the weather, just know that you're not forced to do that. So it's cool that you're able to, but that I appreciate that, but there's no rush. There's no rush. I apologize to all you guys who think that you do get it fast by default, but there's no standard. Just that it's out within 24 hours. Just saying, he's done a great job. So on that, I said actionable. So the stuff that I cover obviously is my opinion. The lens that I look at the market through, same shit I say every time. It's not financial advice. I don't want you to go smashing the buy or sell button based on what I'm saying alone. I know that it's unrealistic to say that and expect that you guys don't, look up to people on Twitter. But just understand that you might have someone's strategy, you might be able to replicate their approach, but that's not necessarily what makes them a great trader. A lot of times what makes people great traders is that they, specifically during times like this, they're able to manage risk and continue to play the game. So anyway, all that aside, formalities aside, again, as always, you guys know that we are big fans of Phemex. They are a non-adversarial exchange, so put it that way. A couple exchanges that you could think of trade against their customers. They're adversarial. Phemex is like the Chase Bank of exchanges. They're big on customer service. They're reliable. They offer no KYC, up to 2 BTC withdraw in a day. So Phemex.trade is the link that gets you access to whatever promotion that we're currently running. And they have 200 pairs, spot, futures, and yield if you want to be in stables, which allows us to segue into the first area of business. I have a few points that I want to touch on. So off the bat, obviously we're going to talk about price action. We're going to talk about Bitcoin. Maybe not necessarily price action, a little bit of order flow, obviously. Take a look at the TPO chart. We're going to talk about, Terra. That should be a no-brainer. So what happened the last 2 days? We'll briefly touch on that. I don't want to get too into that because there's a lot of people that are reeling because they lost significant sums of money. And yesterday I was kind of teeing off on Do Kwon, which is not necessarily the best thing to do because it's he might be a total dickhead, and he might be someone who has a ton of hubris and is a little too a little too big for his britches. But there are people that are collateral damage because of that, and it's really unfortunate. I got a bunch of messages this morning, and I have to make sure that I am mindful of victims. So we'll briefly touch on that, and then we'll talk about, I think, the most relevant detail, which is tomorrow's CPI. So basically how I'm trading that. And then we'll wrap it up and we'll do the call-in. Okay. I see there's a ton of people in the chat. Make sure that if you're not subscribed, that you go ahead and hit the subscribe button. I'll look over the chat momentarily. I'm trying to figure out how to be a really good streamer now because I never was a streamer that was consistent. But one of the things I notice is that if I look at the chat early, I'll start mentally addressing some of the things in the chat, and I won't. And then you guys know how I'll sort of talk in circles. So my front door is ringing on my phone. So that just took me out of my train of thought. Anyway, I'll go back to the questions after we touch on everything. So first things first, let me switch it over. And again, if you're not subscribed to the channel, make sure that you hit the subscribe button, hit the like button. We really appreciate that because now we're doing this. We're going to be doing this often. So let me change the screen. All right. I'm going to just open up. So that's my CPI setup. Just going to open up really quickly. Oh, we're on it right now. Just a BTC chart. Everyone's aware where we sit right now. First significant higher time frame change. Right, so we have a market that it's still driven by equities. So if you were to look at like a NASDAQ chart, QQQ, E-mini S&P, SPX during cash hours, and you looked at BTC, you would see that they are basically running a tick for tick correlation. Might not necessarily be tick for tick. There's periods where there's slight deviation. There's a little bit of, as I say, idiosyncratic behavior, but that is few and far between. The norm, which is like the most important thing that you should focus on if you're trying to assess an environment, like what are the norms, what are the exceptions, what are the norms, so that you could see, you could be able to filter what stands out, what's noise and what isn't. The norm is a really strong correlation. So, how would you apply that? Well, you see a textbook, literally like a TA textbook setup. It looks like there's a breakout in the making. Bitcoin looks good from a technical standpoint. Maybe the order flow even looks decent. Maybe there's a bunch of other factors that add weight other than just, something that's made of 4 data points, that's a candlestick, right? So, and I mean just open high, high, low, open, close. So you might see something that looks like a technical setup, but you have the S&P beginning to lose a structural low. It's leading. Well, the norm has been, obviously, the rule has been that they're highly correlated. So that's a case where clearly you wouldn't want to be looking for a breakout trade when you have something that is moving the opposite direction. Just how you could use this, and that's so obvious, right? I'm not teaching you guys anything right now, but I guess the overarching point is that Bitcoin is not trading in a vacuum. It's not trading it's not in its own safe market. It is very much tied to everything else. And as markets continue to drop, that's the way things work. All correlations go to one, especially when you're, sort of cascading down, which we're not necessarily doing yet. But the S&P right now is it's at the whim of the Fed, right? And they've said that their biggest agenda is obviously fighting inflation. This is not going to change until they really change, right? Until it's clear that they're pivoting based on an action that goes against what they've been doing for the last 6 months, whether that means pulling off QT, whether that means explicitly saying that they're going to start, dropping rates, lowering rates, pulling back, things that are explicit, right? And then it's, okay, the Fed is actually pretty explicit sometimes, and people still consistently fade the Fed. It's just been don't fade the Fed in a different direction for the last couple months. And you see human behavior on display, hopeful human behavior on display all the time. I mean, we've all kind of fallen for it at certain points when things are lining up, but they still go against what sort of has been the macro theme. And rallies have been worth fading, and honestly, some supports have been worth selling. So context has completely shifted. Now, the S&P has lost a very significant level. I know I'm starting on the S&P. It might not be the most interesting thing, but it is the boss right now. The S&P has lost its 4K level. We could see significant gamma effects as the market continues to move down. This is because options dealers, options writers, market makers, any puts that are sold, so normally as protection. Now, we're in sort of a level where previously in the past, 14-15% off highs, we're getting close to that 20% level where people might consider, oh, this is where the Fed gets involved. This is where they pull back. This is where they, begin to maybe change their language, be a little bit more dovish. And this area would be pretty populated by a good amount of puts. So what were at the time, out of the money options, and any dealer, any writer who sold those, if they are closer to being in the money or in the money, they're going to be hedging aggressively as the market moves down, and hedging implies selling futures. So it's like, seeing a fire and throwing more fire on it, right? So markets are thin right now. They've lost major levels. For the S&P, I have 38 and then down around 35, 34. And I'll give you those levels really quickly. We're looking at basically the highest volume levels on a year-to-year basis. So this I'm making sure my screen's lined up with you guys. There we go. This consolidation down here before expansion, that's right around 38, 39. Just a sticky area where you could see price gravitate to. And then all the way down here, which is pretty far. And honestly, that's probably like a 30% drop off the highs. Close to it at least. So from the high down to 34, 29, close enough. I see these numbers long enough that I it's clearly I'm not doing the math in my head. It's recalling from memory. But that's where things really begin to pick up from a structural standpoint. The market looks really ugly right now. Of course, it's going to look really ugly when you look at it in a log chart. But what this means is there's no Bitcoin bottom until this bottoms. Now, yes, Bitcoin will probably be the first thing to start really ripping when this bottoms. But Bitcoin won't bottom and rip up without the S&P for long. So if the S&P bottoms and Bitcoin already started moving up, and the S&P is actually putting in a good structural bottom, then that's probably a good time to start really getting bullish on BTC again. Where it sits right now, the conditions that markets are in, very thin. Bitcoin might be at its own, important niche structural level, but without the support of the S&P, there's no reason to assume that the correlation would just stop, especially as Bitcoin is at like the precipice, at its own very significant, the most significant contextual level in the last 2 years. So, and the most important contextual level. And if you guys look at the stream notes from the last 2 streams, what did I mention? I mentioned that if we broke 37, there was probably a ton of liquidity, and then we would move back down to last summer's lows, which is exactly where we are right now. It's the most important contextual level because this is the level where everybody is focused on, right? There's a ton of involvement previously that took place down here. There's likely a lot of people that are still defining their larger macro bias based on this level. So it doesn't mean that if we break below it, like it's an immediate sell and that, we're going all the way down to Goblin Town. What it does mean is that could be an area where people can get really caught off sides, assuming that, right? Because again, it doesn't look like there's anything down here. So if this was just basic TPO approach and this was your gap, and this is, a place where value established for over a year, even if this was a 5-minute chart and it took place like that, and this whole period, this whole structure is a gap, a lot of times you're looking at the ledge for an area to get involved, for a trap to set up, for, shorts to get overcommitted. Now, one thing I do have to touch on, and we'll get to the other stuff, is that as the market has moved down, so this is an area where we could potentially have a short-term bottom, right? As the market has moved down, though, what we haven't seen like any kind of crazy involvement in derivatives. So this is just Binance open interest right now. I don't know what all of this is. I don't, and I heard that CL had pointed this out as well. I don't know where this massive increase came from. It almost feels like it's either not real or some kind of misprint, or you could actually just go in and look at the amount traded in volumes and see if this actually makes sense. But I don't see where all of that could have came unless someone is actually just shorted here and is still very safe. So either way, it's almost like that's negligible. So this entire increase in open interest, it's back within here. So even if that's real open interest, no one is in trouble until we get all the way back up here. So there's no risk. Imagine this is just one person responsible for this entire increase, which is a massive increase in open interest. Imagine that happened. They're still good to get out of break even all the way up to, let's say, 45, right? So more importantly on this breakdown though, no crazy change. No crazy change that hasn't been washed out a few times over. And on the way down, and I think this is the more pressing detail, on the way down, funding actually remained positive, and that's never a good sign, but it's never an immediate, you can never draw an immediate conclusion that it was derivative longs getting overly aggressive. Now that's like the first order of thinking, because the funding is a mechanism that's used to incentivize traders to keep the index and the exchange price in line, so the mark and the index. Now, that can be if derivatives are getting very aggressive. So if you have the market that's moving down and it bases out and you see the funding is really positive and it's getting more positive, a lot of times in the past this has been indicative of derivatives buying, and it's not what you want to see. If you're looking for a bottom, whether it's on the high time frame or the low time frame for short-term setups, you want to see someone getting caught offside. Now, passive traders can get caught offside, so if there was derivative buying, that implies there's a counterparty, meaning that there's someone who's on the other side of that trade who's selling. A lot of times it's a market maker, right? So a lot of times it's not like you're seeing the market continue to move down and someone's still passively offering this lower. So that is one instance where funding will be positive, right? Where they're aggressively buying. The other instance is it's just a formula, right? Based on the spot oracles, right? So a combination of spot exchanges are created. They create an oracle so that just one exchange can't be manipulated and throw off the entire thing. So you have basically an average of exchanges, and the futures price, right? So when they're out of line, it could be because, if they're positive rather, it could be because derivatives are very aggressive, or, which has been the case in this recent drop, it could be because spot is just selling harder than derivatives are, which is a bad sign, right? That's bad. But that's also, the further we go down and the more you see spot volumes picking up and selling off, you can consider it an exchange of weak hands to strong hands. And I hate saying that because it gets used from prices all the way from fucking 65 all the way down to 50 to 45. It's like, oh, weak hands. No. The thing though you have to understand though, with higher, like long-term Bitcoin whales, or just massive whales that have been in here for a long time, since the beginning. The lower we go, closer to that like 80% drawdown, if we get there, it doesn't matter for them. They are still up thousands of percent, and it's not likely that they're going to sell their entire position unless there's some kind of major structural change to the market. But literally what you see is that the new participants that came in, they give back to the whales that existed before the bull run. And these are people that have different types of conviction. They have a different agenda in the market. They're not looking to scalp. They're not looking to swing. It is far different, right? So it is literally an exchange from weak hands to strong hands. And if you guys hear a thing in the background, it's because I have contractors outside my house right now redoing a fence. So I apologize. I don't know if it can pick up on that. I hope it can. But we are seeing that spot is selling off. It was selling off more aggressively. There has been a significant amount of volumes done. So that's a good sign. And we're into this, very significant structural level. But again, it all depends on, are equities going to stop moving down? Because there's no way that equities continue to move down and BTC doesn't. The rule has been at least a multiple of 2. It's usually 3 to 4. So if equities dropped, just to put this into perspective, if equities were to drop to, let's just say 38, right? So that's another 4%, okay? Bitcoin has always doubled that. Excuse me, drinking Pellegrino. Bitcoin has always doubled that. So 4%, we're going 10%, right? And that's a minimum. That is a minimum. Usually it's like 3 to 4. I'm saying the minimum is it doubles it. It usually does at least 3 to 4. So to put this in perspective and just get this in your head right away, because it'll make it a lot less painful. And for some of you, I'm not, again, not financial advice, but if we were to go down, and again, equities are slippy right now, they're thin, and if they continue to press the hawkish narrative and the fight against inflation through the use of hiking rates, and at some point you're just going to have, we're pricing this in as we go, but if we were to get down to 34, that's a significant level by a lot of different measures, whether it's long-term moving averages, whether it's, volume profile, structural level. So that's a 14% drop. Just imagine right now, just looking at BTC, and this is not fear-mongering, this has been the rule. A 30% drop brings us down to 20. All right? So, again, something to just be mindful of. It has been the rule, right? So that's a high time frame. That's a high time frame. We're still within a higher time frame range. This should be, by all means, a level from a contextual risk-reward standpoint that seems more compelling to long than short. But if equities continue to moon down, there are cases where I can short support and buy resistance, and that would be one. If things were just losing their footing, it would be impossible for Bitcoin to keep its own. Just put it that way. Let me just look at the chat real quick. Okay, so what I want to go over really quickly is, one, there's significant bounces across the board today. So we see Luna was up, I think this was up like 20% at one point. Solana was up 15+%. Mean reversion, that's all, right? This is mean reversion. Don't start right away. I'm seeing like things like the bottom is in. Hey, maybe it is. Okay, but you don't want to be you don't want to swing at the first pitch in this situation. for BTC, just to be clear, this is a major change. I would say with almost certainty that this is not the low right here. So what you're looking at is, just make sure, this is trending period in a larger range. So brief trending period, consolidation for an entire quarter into the second quarter, and we finally just accept it outside of that. So you never fade the first leg. Now, this could be the bottom, but I think no matter what, I'm playing this the way that I play a range. I picked up, on the way down, I picked up a little spot BTC. I had bids that I had below around 34, 33, and I publicly said I was removing them. So I don't mind as much while we're still within this range to pick up a little spot BTC while we're still above these lows. I could always sell it, right? It's not like I'm stuck in this position. And I know you guys have seen me, how quickly I will flip, and abandon something. So this is a range. This is acceptance outside. I think this is so cleanly defined that unless I get something lower, I would not want to get involved at all within here. So, I mean, we're above right now we are finding resistance under the lowest weekly close. Okay, so this is your lowest weekly close of the last, we're going on a year and a half at this point. It's been a long time. Going on a year and a half. I've been calling this a bear market since all the way back here. It had long periods of trending behavior within it, but I missed on the all-time high call. But I said I think we're going to be ranging for over a year. And I don't feel vindicated because it doesn't fucking matter. But the lowest weekly close, that is acting as resistance right now. You best believe that after a structure like this, that this level, the underside of that structure, is going to act like higher time frame resistance. It should. So where we are right now, I am not interested. I'm either interested if we flush these lows and get some kind of further, transfer of wealth down there, maybe a little bit more signs from the derivative market, or if we start reclaiming quarter one value area low, this range value area low, these range lows. So ultimately, what could happen is, and why I don't want to get overly bullish in the face of what we're seeing in the macro environment, you have a high, a lower high, sorry, to the left, you know what to the left is, right? It's another high. I see it's off the screen. This structure very well could play out where we do get a peak within here and then ultimately form another lower high. So I don't want to see, oh, we're just accepted within these lows. I want to see, oh, we're accepting within these lows, we're selling these lows, and we're finding support within here. And then even then, my position is going to be defined somewhere down here, right? And at that point, I'm not holding if we were to, let's say, poke up and then break back down. My point is the underside of this structure is where I would base my invalidation, right? But I would need to see presence. I would need to see presence in here. I don't mean one big candle through here. More than likely, if we did something like this, where we based out and then we had a candle up into these highs, this would be a fade, right? Take these highs, expect this to roll over further. Or like I said, further breakdown, swipe the lows, see some kind of trap set up, ton of volume done. Has to be, again, determined based on, it all is contingent on what the S&P is doing. So let's say the S&P is, put in a similar structure, similar type of situation. And that would give us some tailwinds. Or imagine if the Fed starts being very dovish. But asset prices going down, they've said the last week. I think we have a bunch of Fed speakers coming up. They have continued to beat the drum of, it doesn't matter, inflation is the goal, lowering inflation is the goal, asset prices are hurting, but it is what it is. So that's a high time frame stuff. CPI is tomorrow. All right, let me just go through the chat real quick. Okay, so for alts, I just want to mention, big bounces on alts, it's mean reversion, right? I said I was longing Luna, and that was because Do Kwon had said something about an announcement. The S&P started losing its lows, I ditched the position. I could get back in again, My thing with Luna is, let me just go to Luna Perp. One sec. There is a significant amount of open interest that has come in from, and hopefully you can see it, from right here, right? So in that move down, we've seen a pretty significant rise in open interest. I meant to use the eraser. As you can imagine, that's more than likely, hedgers, panic shorts. So any kind of breakout of this local structure. So I'll go to something else real quick because I already have it set up. Any kind of breakout of today's value where we're able to accept above something like 36, the closer we get to these highs, right? The closer we get to those highs, the more likely it is that we could see, sort of this reflexive pile-on effect by the market. Like, oh, Luna's going to bounce tremendously. Do Kwon's going to fix everything. And again, that open interest that we saw into the low could start exiting their position if they are, shorts that are looking to get out with something left on the table. So that's something to be mindful of. Other than that, I can't imagine trying to focus on a bunch of alts right now when you already have one market leading BTC very strongly, and it not just being a case of the S&P bouncing around now. We just lost 4K. Hopefully that makes sense. Let me just go through the chat again. Let me just see something real quick. I keep getting this motion at my front door. Bear with me. Oh, it looks like I have a package. Okay. Sound is echoing. Okay. Yeah, Binance, I just saw something. Binance data. It is a little bit, there is latency, so. So the announcement of an announcement is tough. This is a weird situation because it's not like, again, the markets are, I've been saying this for a long time now, markets are just sensitive. So with this kind of announcement, I almost feel like what he wants to have happen is the market to actually start moving up on its own without them actually doing anything. So by the time they announce something, he's kind of like played that game of having 5 announcements before anything actually is revealed, to try to restore faith. Again, higher prices, I hear my dog, higher prices end up restoring a bit of faith or a lot of faith in this market. So you have to consider that. And ultimately, I cut the position because the S&P was losing its low. I only tagged on a starter, which is what I always do when I have sort of a thesis or an idea for a trade, other than just taking advantage of a short-term opportunity. If it's like a swing, I always tag something on. I've said this plenty of times before, but the idea is just I would want to see that I was there was some kind of momentum that was beginning. And then I'd continue to buy as we moved up rather than expect more of a dip. Once it stopped working, once it didn't do exactly what I wanted, I just cut the position, which I think a lot of people have trouble with, is just cutting positions a lot. And it might mean you getting in and out multiple times. Okay, so let me just go to, all right, so CPI. Tomorrow's event. True free trades. Same thing that happened last time. Same thing that happened with FOMC. With this, I would say, it's obviously going to be more significant than previous CPIs. So here are the more recent CPIs. So this is March's CPI. So that was on April 12th. And this is February's CPI. So it comes after, obviously. So both of these were followed by immediate pumps and complete retracements and engulfings of the prior structure. So immediate pump, this one was little bit less significant, and completely engulfed after. Now, I said the last time during the FOMC or leading into it, I gave my entire game plan. It's very mechanical. So it's the same setup for CPI. Now, tomorrow's CPI is very significant because the narrative is that, we already see where markets are right now. We already had the FOMC, 75 basis points off the table, yada, yada, yada. That could change. There's no rule. There's no, Powell can pivot. So if CPI comes in hot, markets are fucked. If CPI comes in the same or lower, I think you get a move up. And I'm not thinking outside of the day, right? Because I don't want to think outside of the first half an hour, because whatever the market does after that half hour, that hour, my opinion doesn't matter. It's probably going to be the direction for the course of the day. So the first half hour is really what I'm talking about. So if CPI comes in even or less, you already have the narrative that everyone is, that a lot of people are sort of passing along, is that inflation peaked. I don't think so. I think that it's probably going to be like a 1 to 2 month thing afterward. You have the Mayhem used car index. You have car gurus, which didn't show the same information, but Mayhem used car index, something like 50% down. So it's it's pretty good. It's upstream from car gurus. It's more auctions and wholesale, but all right, whatever. Anyway. So the first trade is mechanical. So I have said this the last few streams. I enter in with what is not negligible size, but it's not what I'm really trying to attack a trade with. It's something where I can actually return myself something that's worth placing the trade for in excess of fees. I'm immediately trying to basically mark it in the direction of the first direction that the market starts poking through. So if we have an inside setup with inside bars leading up to it, where it's very clear that price has been funneling, once we accept the high or the low, a lot of other people are marketing in and sweeping the book too, but I'm marketing in with a small fraction of what I normally would trade with. And this is because, again, everyone's sweeping the book. You're not going to get filled with a limit. You don't have to do this manually. You could bracket the area of prices. Think about it like a straddle or a strangle. You could do that where you have conditional orders, where you have a trigger above and below, and the market breaks the trigger, and then you mark it in, and then immediately exit. Though I'm looking for probably at most 150 basis points. So I know between 100 to 150 basis points, I could layer orders to get out of that trade. So it's a market in, and I'm getting out with a limit. A lot of the times the market ends up moving further than that. You get like 300 basis points, so 3%. And then that first move is always a fade, almost every time. And every time in recent history, and recent evidence is obviously the most relevant because we're recently in a completely different, seems like a different regime. So this was February CPI. We're looking at a 5-minute chart. So here is the release. You get a 244, so 2.4% pump, so 244 basis points, completely engulfs. All right, so from the high of that, you're down 4%. From the release, you're down 2%. So this ends up with like a 4% range. Okay, same thing, less pump from March's CPI. So sorry, one sec. So less of a move. This is, oh shit, CPI is still hot. Still get a pump. This is less than 100 basis points. So this is a trade where, oh, you're getting in, marketing in, and oh shit, didn't even get any of your limits filled. Close this out and short it. And this is what I'm observing flow. I'm observing price action. It's a little noisy in this kind of, when things are moving quickly, for me to try to focus on too many things like the footprint, flow, and price action all at the same time. So I'm really just trying to get a feel for the tape and price action. So, and I'm also heavily leaning on what has been a pretty predictable setup. So whatever direction the market pumps, you're probably looking at a max move of 3% historically, and then a complete reversal. So these are two trades. Again, the first one is mechanical. I'm getting out max 150 basis points. In this case, selling before that because I have to chase it to get out of it. But there's no way I'm like hoping for 4, hoping for 5, hanging on the position. I know that if I am willing to size it appropriately, that I could take something out of this trade and it's just a free trade. The follow-up trade, the reversal, this is where timing it effectively, being able to interpret, flow and see when price is actually making the turn can be really rewarding, because this is usually going to throw back all the way below. And in this case, we're saying below because it was a pump followed by a retracement below prior lows. So what you're getting is, let's say that leading into this, the market is positioned one way or the other. So one side stops or ran, right? So if this is an accumulation of positions, one side stops or ran, all right? As that occurs, as the market moves up, you're gonna have a lot of people that have your breakout longs in place, right? So breakout long, they're gonna be placing immediately either trailing stops, you could think of what they would be doing, placing trailing stops, getting out manually if things go south right away, having take profits. So as soon as the market moves up and triggers these orders, there's already built-in sell pressure right behind it. So what you get is a move that is a lot more violent because you have that speed up right through stops that were never even hit. So what it does, it whipsaws, right? Move up, yank back down. It could be like this, right? It can move down and then rip back up. And you're gonna get a more violent move after the initial move. So for this, you could think about all the different ways you might want to try to play this. And I don't advise, if anyone has never looked at this in the past, to just immediately start putting a framework around it with any kind of significant money. But you could think, all right, so what happens what kind of approach can I have? Can I potentially just take one of these trades off the table because it might be a scratch? And should I go for the turn? Should I go for the turn with limit orders placed by some measure of ATR or some measure of volatility? Whether it's, okay, leading up to this, I'm placing limit orders from 1.5 to 3% up, or am I I'm going to be trying to time the turn because, God forbid it gets 4 or 5% up, we have a big move. Once the market starts consolidating, the market doesn't continue. I'm going to say this as if it never has, but that's how unlikely it is to actually continue. If we have CPI come tomorrow and we actually do get some kind of really positive result, let's say the market continues up a bunch. The first area of consolidation, I don't care at that point if I don't care where it is, what it looks like. I'm starting to look for the short no matter what. I'm not looking for a dip to get behind. It's very unlikely that the other side of this doesn't get swept. And especially in this environment, right? So this is the trade, the reversal, that I'm really looking to hammer. And it's not one that I'm trying to make sure that I at least hold this past the entry, right? It's almost like you could look at this, and that's silly to say because a lot of times I'm looking for a lot lower. I'm looking for at least the stops that led up to it to be ran. So if the market ends up creeping up into tomorrow and we was looking something like this, right? I am looking for these lows to be ran. Let's say we get a pop, almost 99 times out of 100, that's going to happen. Think about it this way though. Let's say that the market chooses. So what other ways might you play this if you want to play it mechanically, but you don't want to take a lot of risk, and you just kind of want to nibble on something and get a feel for these types of situations. Let's say the market walks into CPI tomorrow and we're like this. Okay. One of these trades, I said I like to take mechanically. The other one is way more discretionary. I'm trying to get a feel for when to enter, when to exit. I'm trying to have a lot off of that trade, right? Or take a lot out of that trade. Now, it implies a round trip though, right? No matter what. So by all means, past the center point on a U-turn kind of implies a trade exists, right? So what that means is, let's say I don't want to get in the first trade and I also don't get in up here. If we have a structure leading into this, you have multiple, lows leading into this, and we're extended from those lows. And let's say here's the CPI pop-off point. that kind of implies that this level is a trade entry. It's not necessarily a smart one, but under the, I guess, assumption that it pukes a lot more and that it whipsaws, it kind of, you're approaching this entry. It's very unlikely that, let's say CPI is right, here is the CPI. It's very unlikely that if the market consolidates up here and then comes right here, that it's going to stop right here. It's almost like you get what I'm trying to instill in you is like the sense of feel of knowing, all right, it's not there yet, but this is almost an occasion where it's guaranteed to go there. So what can you take out of the market knowing, those details? All right. So my game plan is mechanical trade first, discretionary timing after, and this trade, ultimately in this kind of environment, should be something that I pull a lot out of, and honestly, look forward to. What can happen? Same thing that happened to FOMC. Maybe it's maybe it's a pretty boring trade. Does this all make sense, guys? Let's take a look at just TPO. All right, so after a big move like this, after a trending day, we're having our first day imbalance, right? First day imbalance inside of value. Very unlikely that in this kind of structure where it's not a double distribution, there's actually a good amount of meat in it. So mind you, there was no single prints but for right here. My point is this is on the way down, you'll see. There were brief periods of consolidation and overlap. This is the only single print. So this is not a double distribution setup. So in this situation, you expect, honestly, to favor this region. So below 32, I would look for the market to continue to rotate. Maybe have another move up towards 32.5 and possibly set up with another short opportunity up here under the assumption that the market isn't going to just consolidate for one day and reverse or consolidate for one day and break down, especially leading into CPI. So this is a trend day, first day of balance, first day. There's no, continued migration lower. This is more than 50% of value within this prior day, but it is a trend day, so it's kind of spread out. But the idea is I'm anticipating more of a range, right? So you have your plays at the low again, plays at the high, looking for signs of absorption at the low, looking for signs of absorption at the high. And in this case, looking at signs for acceptance at the low because we could technically be looking at a lower target period, but just expecting things to move sideways, at least into CPI. Not looking at this right now and saying, in the case if this was this structure right here was something like this, then we'd say, okay, we're halfway to the midpoint. We're probably going to cover towards the high. And again, just to provide a little bit more of an example, this was a big reversal, looked like acceptance outside of prior value. Market left this very wide open area. Untested, unchallenged positions, it's very easy for us to cover that region. Whereas this is, from a structural standpoint, much more of a trend day, much more of trending like behavior within it from how it moved down pretty. It was interrupted on the way down at least. Trading positions, I'm just looking at the chat real quick. So again, the idea is I'm looking for the market to continue to range within this region, looking for mean reversion plays from the high into the low. With the low, in this situation, just as a reminder, if it's a downtrend, potentially we're looking at momentum to be lost towards the highs. Whereas with the lows, we might get a further move down than what would fall within like the meat of this value area. So you could get something where value transitions down, right? And why I'm saying that is I'm not saying expect it to be perfectly within here. Whereas the move down might involve a little bit more of a little bit more follow through just because of where the market is sitting right now. But the S&P is back above 4K. Look at that. As far as journaling, CoinMarketMan is probably the best thing. I also keep a calendar though on Excel of exactly what took place on the day. Just my thoughts for the day, expectations, just like a paragraph of each day. Alts are awesome to scalp when you find the alts that are, again, the market is most concerned with. It's honestly better to scalp them instead of BTC. And I was scalping Luna this morning. I was scalping Solana this morning. And I mean, all I was doing was really just looking at a similar setup to this right here. One sec. Just watching the tape breach. So this is a crypto watch. For example, I'll just show you. This is Luna, but we'll leave it on Luna Perps. I just have large orders and then a regular tape. So get it, especially with Luna. I want to see if people are starting to offload significant size again. And trading these just around structural levels. Again, I already know what open interest is doing into this, and then I'm just trying to get a feel for the interest around the, certain points that I have mapped out. And honestly, it's better to trade this a lot of times than BTC. No, I don't think I would trade the ES the same way. There's just different expectations with BTC based on, the accumulation of positions that actually take place in our market versus the ES. You're not looking at like buildups and open interest in the ES. You're just looking at, if you're looking at flow, you're looking at where volume accumulated, looking at a footprint more, whereas BTC, it's a little bit more reflexive. And Bitcoin is more technical. So Bitcoin is just a little bit more technical right now than ES. So any other questions, guys? Do you have a PT for Synapse? Do I have a PT for Synapse? No. I mean, I'm already half out of that position that I got in. So, mind you, whenever I share a position, I also say right away that I get out of these very quickly. So, this morning I just closed out a little. Not a little, half. I can't be confident in any alts right now. I'm in too many chats where I see people that are very confident in alts, and I see, and no disrespect to anybody, but there's like a lot of, it's very easy for people to forget like who's doing the pushing in this market, and that the fundamentals don't mean shit right now. So same thing for like I can't tell you how many people I've seen say they're buying ETH in advance of the merge, because the merge is absolutely not completely priced in and it's going to absolutely involve higher prices. That's great, but does that mean that we just come back up to here after dropping down to 1500? I mean, technically that could be right? Technically that could be totally spot on. ETH's merge leads to ETH moving up 100% right away in a week. That could be incredible, unless it's after ETH already dropped down to 1500 and 100% move takes us back to where we already were. So until this is all said and done with, I can't imagine owning an alt without having paper hands. This was Crypto Watch. Crypto Watch is a great platform. I ended up going back to the Agar tape. I was looking at this for a little bit just to look at FTX and Binance. I ended up going back to Agar. The sound is what this is missing, which honestly is you get used to hearing the sound and having an idea of what's going on in the market. But it's a great platform, and Nomad had messaged me probably a month ago and keyed me into some pretty cool upgrades that are coming. You know, the best thing about Crypto Watch is it is so fast. It barely uses any computer resources. Like, this is a desktop platform, and it's massively customizable. So anywhere I want, I can just, create whatever I want within there. If I want to look at, for example, spreads, it's going to show me the bid ask. It's going to show me the actual order book spread. So great platform, but ETH BTC looks great. It absolutely does. But again, I think that we're in a really interesting spot. This is either a spot that the market does bottom in, because it's just the most significant contextual level on the chart locally that we're even close to, or it drops a hell of a lot lower. So nothing is going to be safe. Like, ETH will be stronger against Bitcoin. I'm almost certain of it, but I think that it's going to be a case where ETH USD, drops precipitously. So macro bottoms in the past have been marked with long periods of backwardation. So long periods of backwardation means, let me just pull something out real quick. Hold on one sec. I'll show you. Top right. So long periods of negative funding, right? Significant volume, right? A significant change that takes place between weak hands and strong hands. That's absolutely true in the spot market. Negative funding and sideways prices. What else? Backwardation, which is something that you can see. Actually, I can go to Levitas from that, but one sec. It's probably a little bit. No, actually, it might be better up here. So Levitas, web. So previous bottoms have been marked by longer dated futures contracts closing out their basis trades and actually trading at a discount to the current spot price and the front month's price. So what that means is, like, your quarterlies. So your quarterlies, your linear futures contracts, the further out expirations, the tenors, trading even or below the current spot price. So that's been a pretty good sign of the market being battered. Another thing is, honestly, and again, this not a market in isolation, fear and greed index being actually where it is for quite some time is a pretty good sign. But we still have, longer dated futures contracts are still trading at a premium to the spot market. So, I mean, it's a lot of things. Your longer term moving averages flatten out. Start to see signs in lower time frame price action. Negative news no longer has an impact. That's another one, right? Negative news, price moves up. Negative news, price at least doesn't move down. So there's a bunch of things. It's not, if it was something that you could easily describe, it would be formulaic and you could just implement it and no one would have problems buying the bottom, right? But that isn't the case. It's very nuanced. And it might not be the same where you have I was talking with Dan from CMS. We're in a chat, and we were talking about backwardation. It might be a thing of the past because of all the new entrants you have in this market. That basis trade might not even, it's not even there anymore, obviously. But there's possibility the market doesn't go as backwardated as it had in the past. Also, another thing, 25 delta skew, which is a little bit more involved looking at options. That being persistently negative for a long period of time across all expirations, that's pretty good too. But I don't want to go into that because we're towards the end of the stream. We're going to do the call-in. So did you guys hopefully enjoy the stream? Did this communicate everything in hopefully a pretty clear and effective manner? If it didn't, at least someone's going to be writing this better than I could talk. But I'm going to share the link on Twitter now. Take a quick 5-minute break. And then I'm going to go live on call-in. And if you guys haven't been on there yet, you could listen. You can, ask questions, whatever you want. You could basically transition from the stream, whatever question you have, and then ask me on call-in. You could either ask by typing, or you can ask by, actually speaking. So, but I know some people are shy. I think that covers everything. So right after this, 5 minutes after this, then what do we have? Thursday and then Friday also. All right, guys. Talk to you shortly.